Hey, it's Monday. That means it's time for our Monday Market Outlook. My name is Matthew Buckley. I'm the Chief Investment Strategist here at Wealth Creation Investing. And our king just got done speaking. And of course, he's starting to set up the Washington optics of our next fiscal pothole, fiscal gorge, whatever you want to call it, the debt ceiling debate that's going to hit us in mid-February to middle of March there. So the president, being who he is, of course, is already blaming Republicans, saying, if these guys are going to hold the United States creditworthiness hostage, they're the ones that are going to be responsible for a government default. It's just, folks, you can't make this stuff up. And of course, the press was kneeling in front of him. There wasn't even a softball question, folks. It was cotton balls. It's absolutely unbelievable. Of course, nobody in the media brings up the fact that back in 2006, then Senator Barack Obama, of course, voted against raising the debt ceiling. Why? Bush was in office, and he railed against us spending more than we bring in. And Google it yourself, folks, or look at it on YouTube and see what the then senator had to say about raising the debt ceiling. And it'll make you sick. Or actually, if you voted for the guy, it won't make you sick. You'll ignore it and say, well, that just doesn't mean anything. Of course it, folks. So now we're heading for another train wreck here come in March or middle of February. I'm going to be ready for it. The traders at Wealth Creation Investing and Tompkin Options are certainly going to be ready for it. We were ready for the fiscal cliff and saw our model portfolios profit wildly based on the stupidity in Washington, and we're going to see that again coming up here. On our flight schedule this week, today, not too much on the flight schedule. We have the Bernac speaking, but we know what the guy's going to say. He's not going to come out with anything new, right? He's already given us an unemployment target of 6.5% and said he's going to keep printing money out of thin air until unemployment gets down to that rate. Apparently, the guy needs to go back to Princeton because the effects of all the other quantitative easing and the Operation Twisting and mortgage-backed securities and buying of treasuries has done nothing to lower the employment rate. But, it's a wise Marine once told me, when in a hole, cease digging. We're just going to keep on digging and see if we dig harder. It's like Monty Python. Maybe if we ran away some more, it would really confuse the rabbit. Tuesday, we get a little more into it, seeing some inflation numbers and also some retail sales numbers. Wednesday, seeing some long-term purchases, cap utilization rate, industrial production, also the NAHB coming out with its housing market index, and also the Fed's beige book. Get a look into their cliff notes. And then Thursday, a little more clarity into what's going on with housing towards the end of last year with building permits and obviously weekly unemployment claims, housing starts, and the Philly Fed. And then rounding out the week on Friday, we really don't have too much. But the biggest things going on this week are earnings, right? This week is full of bank earnings. We're going to see Goldman Sachs. We saw Wells Fargo last week, but I really believe on Wednesday they start in earnest. So let's take a look real quick at the flight schedule and pull up Wednesday in earnings. We're going to see regional banks. We're going to see big banks. Yeah, U.S. Bancorp, BNY coming out. Let me see when I think Goldman Sachs, what's on the 17th? American Express, Bank of America, Fifth Third, PNC. So obviously this week is big financial week. State Street, SunTrust. So a big week for financials reporting. Wells Fargo reported last week and kind of underwhelmed their net interest margin, which is that margin. So they borrow money. There are banks. What else do banks do? They borrow money from other people. They borrow money and then lend it out for people to buy homes and stuff like that. And their net margin interest actually went down. So that's not a good harbinger of things to come. But here's what I think is going to happen with banks and their earnings is they're pulling a little bit of an apple this time around. I think they're underpromising and they might overdeliver here. A lot of banks recently have talked about cost cutting. JP Morgan and a lot of the heavies getting rid of heavies actually for managing director level and above, starting to thin out the upper ranks, which is funny because when you think about it, why pay a guy a couple $1 million a year and an additional couple $1 million a year in a bonus when I can get a 26-year-old MBA right out of Wharton who can more or less do the same job, if not better. So the banks are starting to wake up to the economic realities. But recently they've also announced Uncle Sam or asked Uncle Sam to get out of their back pocket, right? The stress tests going pretty well. sell, but more importantly, they want to start buying back shares, and they need Uncle Sam's permission. A lot of them do, since they got it thrown into that whole too big to fail thing. Other news today, Apple really taking it on the chin. This article in the Wall Street Journal, Apple cuts orders for iPhone parts. They're starting to see soft iPhone 5 sales. And regular viewers at Top Gun Options and also at Wealth Creation Investing know that this was coming. Why? Because I said it was coming. As soon as Apple hit north of, right here, as soon as Apple hit north of 700, I said sell. I said Apple's done with. It's becoming commoditized. The Amazons, the Facebooks, the Googles, the Samsungs, they're in a race to the bottom, and it's going to be a pricing war, just like the airlines. Okay? Instead of charging $200 to get from Miami to JFK, I'll charge $190. Oh, you're going to charge $190? Well, I'll charge $180. And it's going to be a race to the bottom. I mean, we have Amazon Kindles that are ad-supported. And also with kind of some really ill-timed announcement or information come out that they're already looking at a potential iPhone 6. Really? People haven't even digested, or people were still kind of waiting or deciding to buy an iPhone 5. You think they're going to run out and buy an iPhone 5 when now there might be an iPhone 6 coming out? Absolutely not. So I think it's over for Apple, folks. I think 500 is the beachhead. Obviously, you can see the gap down today. We actually put on a bull put spread down 10% below where we are right now. Apple's got earnings coming up, and I put it right outside of a one standard deviation move, or actually just outside of a historical move out of Apple to the downside. Again, Apple usually tends to under-promise and over-deliver. Last year they didn't. It was the second quarter or third quarter when they really under-delivered and the stock took a hit, but then got airborne again on the iPhone 5 news. I think this time it's different, folks. I think Apple's in trouble here. But I still put a bull put spread on underneath it to see if we can catch a bid here. What you're looking at right now is our weekly options model portfolio, brand new at Top Gun Options. Not brand new. It's actually 1 month old today. We launched it, or our first trades expired on December 14th. It's January 14th. Here we are, folks. We put 2 trades on a week, risking no more than $10,000. So if I fell and hit my head, the most I'd lose in this model portfolio is $10,000. And look at where we are. Year to date, we're up about $7,600. But here's the kicker. Since December 14th, this model portfolio has made over $18,710. Let me just show you a little quick public math there. What's that? 18,700. We'll just round around there, divided by the 5 weeks that we've been airborne. That's $3,740 a week, excuse me, in model portfolio profits in our weekly options model portfolio. As you can see, Apple is our bronze medal or silver medal winner here with just north of $4,100 in profit. Having an absolute blast in this service. We have another Apple bear call spread on right now that's up. We put this on a couple days ago. It's already up 90%, $1,300 gain in 3 days. And then we have a GLD Iron Condor on that's up about 6%. We put this on Friday, up $140. Having an absolute blast trading weekly options, folks. If you don't know what they are, or you're interested in learning about them, or giving us a test flight, go to topgunoptions.com, and you can hover over services and go down to weekly options, or you can just go to this URL, topgunoptions.com/weekly-options. Okay, topgunoptions.com/weekly-options, and you can scroll down and click on the button that says take a test flight, and you can get airborne for 2 weeks and see how we do it here. Like I said, seeing some absolutely superior performance in our model portfolio here, up $7,600 in about 12 trading, less than that, maybe 10, 12 trading days. So a lot of stuff going on this week, folks, into housing, seeing a lot of earnings, seeing some potential inflation numbers and reports coming out. So we're starting to get into the heart of earnings season, starting to get into the thick of it. I'm looking forward to it. Got a primary live trade brief tomorrow morning at 0900 with my primary live traders over at Top Gun Options. It's going to be a great week. That model portfolio is doing exceptionally well. As well, that one is up over $12,000 year to date. So that's about $1,000 a day in model portfolio profits over there in our primary live trade brief model portfolio. Okay, got to get going, got to trade. That's what we do here at WCI and TGO. So happy hunting. Make sure you hedge, and hopefully I'll see a lot of you guys in our new weekly option service this Friday at 1 in our live trading session. We'll see you.